Hi there, traders, and welcome to Trade the Structure. Bit of an overview of last night's action on the US market. Just after the close here, we're looking at it just before the Asian market open. So, just want to run through a few things, just a bit of an overview of where the charts are at, what they're saying to us. Now, the market's tanked a bit last night. You can see, if anyone's had a bit of a look at that, you can see that the US was down quite a bit. The Dow was down 540 points or so. The NASDAQ took a hit as well. It was mainly about inflation, interest rate rises, things like that. So it's the same thing we've been talking about for a while, but it's coming to the fore a bit more. Okay, so you can see oil rallied on a demand, increased demand, lack of supply concerns, and that took off yesterday day during the Asian session, which triggered a bit of a sell-off into the markets on the back of that inflation concern, a bit of a rally in yields as well during that time. So that's triggered some fear into the market. So that's oil there. You can see that really started to take up. We're on a daily chart. It kicked on. It took like the highs at 85, say 85.50 thereabouts. If we go back onto, we'll just get onto the indices now. You can see what happened to the indices. This is the S&P. Now the S&P's had this sort of move up, pull back, run into this level here at 43.35 thereabouts. Pulled back, couldn't get it first time, took it out the second time. Now what we've done is come back, retested it, and heading south again. So really, this level here around 45.15 is going to come into play on the shorter term. See if that can hold, and could be a buy the dip scenario again. If that can flush through, bounce back, hold the high, low, and go back up, then concerns are over. But if it breaks and we start to test it from the underside and then fail, that can open up the door for a bigger move down. Look at the Dow, and that S&P is going to be driven largely by the NASDAQ and tech stock sell-off. So this is the Dow. We've had a flush through that high as well. Previous highs didn't continue too fast. So you can see the emphasis once we get into new highs is not too strong. The commitment is not too strong. Okay, yep, the market's been go up. We're in a bull market. It's still ticking higher, but everything comes to an end sooner or later, and that's what everyone's focused on. When you're loaded to the hilt long, your risk is a sell-off. Okay, it's pretty obvious. If it keeps ticking higher, no problem. But if you are looking to take some risk off the table and you don't know, you're looking at where, if everyone's loaded long at the same time, which everyone pretty much is into these indices, into the stock market, then risk is there's going to be a bit of an unwind. Okay, right or wrong, it could be a bit of an unwind, depending on what's that's going to trigger that, which could be, these rate rises. So like I said, they've got 4 rate rises factored in at the moment into the bond market. Okay, and that's a lot faster than the Fed anticipated. Right, so it went into tapering. They held off for quite a while. It was a really slow move. That's why the market just kept ticking higher, ticking higher, ticking higher. There's nothing else to buy. There's nothing in bonds, no yield in bonds. Looking to the share market was going up in a bull market. So everyone was buying stocks. Now that party could be coming to an end, potentially, um, because they're raising rates faster than we expected, there could be a bit of an unwind a bit quicker than we expected. But we'll see. We'll have to see. That's the Dow. Go over to the NASDAQ. NASDAQ holding these highs. Okay. It's moving up off these highs here. So the same sort of scenario. It tried to get up, pushed up through. That looked like it should have been a bit of a buy, bounce up there and continue on, but it didn't. It was getting extended. Needs to flush out some traders. Now it's could be heading into this zone here around 14,550, for example, because it's got this lower high. So that lower high is pressuring it into. If we just measure that out, just go from low to high, measure that out. Yeah, that takes it in that zone. That's your secondary leg down. So that's sort of what I'm looking at. Maybe it's a big flush. Maybe this is the start of something bigger. We don't know yet. Not enough information, but for now, markets are still a bit tentative, a bit rocky. Okay, we'll look at over to the bonds now. Actually, we'll start at gold. Just get onto gold. Europe was down overnight. Don't forget as well. The DAX was down 160 points, and the FTSE was down 47. Asian markets were a bit mixed over yesterday. They were looking okay. The Hang Seng was looking okay, and then it obviously sold off along with the Nikkei. Okay, yesterday. So we'll see how that opens today. You've got gold. This is the daily chart. Still, the daily chart looks good for me. It's just where to get in. People have been caught out so many times. That's a problem. So we're sort of looking at this as a bit of a break. We're holding higher lows. I like that. This is being big expansion leg up, big contraction leg. We're starting to come out the other end of it, and I'm looking through that 1830 level. So if you can get up through there, and then it starts to attack 1874 and above. Okay, but gold at the moment, it's getting sold off with a rally in the US dollar. The US dollar is rallying because bonds have been factoring in higher rate rises. Yields are going up, so the dollar's finding some buying. Okay, we'll get on to the bonds now. Short-term bonds, look across the yield curve. Short-term bonds, obviously, you can see that it's caught a lot by surprise, the strength in inflation, and with that crude oil move yesterday, triggering some more concern, triggering a bigger rally into yields and bonds to sell off. Look across the 10 years, 10 years down, that's got some good momentum with it behind it. Look, longer term momentum's still just rolling over. We've got short term, it's not really extended, so there could be a bigger move down in bonds, which could trigger a bigger sell-off into the equity market. These are the 30 years, same sort of scenario. It's coming to a low here, but that could easily flush through that, no problem at all. Look at the US dollar. Now, US dollar, obviously, we're not going to look at the currencies, but the currencies are going to be paired with the US dollar. So a move up in US dollar is going to pressure the euro, Aussie pound. You can see that we had a lot of mixed around here. We're talking about inflation there. People, it was kind of heavy, but still getting buoyed. Then it sold off through Christmas and it's bounced straight back. So to me, that potentially is just a flush. Okay, if we start to get a bit of a run on in bond yields, running high and bonds getting smashed lower, then expect this US dollar to start powering up again. Okay, and pressuring currencies. So that's it. That's all I want to look at. We'll see how the Asian market goes, but that's a bit of a rundown overnight, some charts, some levels to look at. If you like what you see, just give us a like and much appreciated, and we'll speak to you again soon. Cheers, guys. Bye.